Good morning, everyone.
Good morning, Gerard.
Because there is a change in time, so numbers are less today. You're able to hear me, right?
Yes, just a little louder if possible.
Is it okay now? Hello.
Yes.
Yeah. Okay. Chalo, let us start. Just a disclaimer first. This presentation is for educational purpose only. I am not a SEBI registered advisor. Please consult your financial advisor before taking any decisions on buying and selling of stocks or any investment decisions in general. We are not liable for any gains or losses made by you. The objective of this course is to spread financial literacy. This was what I showed you last time. I kept it because it is very relevant. The idea is that markets are going to be moving upwards, but not always in a steep manner like this. This year, we are seeing a market moving in a consolidated manner. So the week ending Friday, 8th of April, the Nifty gained, bank gained 100, Nifty 100 gained much more. That is, your mid cap stocks gained a lot. Small cap relatively less, but much higher than the Nifty. So what we can see is the mid cap is doing much better compared to the small caps. Okay. The India VIX is becoming more stable. From 24, 25 values, it is now coming around to 17.69. So it means that the volatility is going to be in control. Okay. Nifty 500 has gone up by 0.9, still better than the Nifty 50. And the next 50 has gone up by 1.6%. If you see the world index, the Dow Jones index has, like the Nifty, is continuously in a sideways manner. The S&P 500 is also moving in a sideways manner. The Nasdaq it had gone down, but now it is consolidating in the same manner. The dollar index is increasing continuously. It is on the increase. It is increasing continuously. The FTSE is increasing. Okay, it has crossed this channel. It is now going upwards. That's a positive sign. The German index is still coming down. You can see. The French index is stabilized, but still negative. The Japanese index is like all the Asian stocks, they are consolidating. The Hang Seng index is down. The Chinese index is also down. The Korean index it has come down, but last 3 months, it is consolidating. The crude oil, okay, this is the one which is continuously increasing every week, but Abhi, it has stabilized around 87 like this. The Brent is little higher. Okay, in the value terms, the crude oil is 98 something. That was a percentage figure, and this is a 102. Okay, the gold is stabilizing. The USD INR, it is actually come down from 78, 79 levels. It has come down to this 75, but still it is high. Here is the Nifty. Now, if you see Nifty, it is in this zone, this box, yellow colored box. It is lower and it is taking support at around 5,000, 15,600 levels. Upper end, it is going around 18,000 The maximum level can be 18,606. Here it is 18,606. So the Nifty is range bound in this range from around 15,700 levels to 18,600 levels. And this is happening since last, if you see the period, it is since last July, August, continuously it is moving in this direction. There is a monthly demand zone. It is touching this and it is going up. So it is in this particular range since a very long time. The Bank Nifty, once again, range bound. Now, if you remember, I had mentioned in my message that there is a gap. I'll remove this and then you'll be able to see what I mentioned. There's a gap here and the Nifty will cover this gap. So that was in, this is my day chart. It was mentioned when it moved up on Monday by some good number of points because of the HDFC news. At that time, Monday evening, I mentioned that there is a gap which has been formed, the yellow box you can see here, and it will close the gap. Normally, this is a learning educational point of view. Normally, whenever there is a big gap which is there are people, retailers who are waiting and their particular requirement was there and they had put orders here which are pending. So normally it is expected that the market will come back and will cover the gap. Now you can see here, it came down Tuesday, Wednesday, Thursday, and it has covered the gap. So now the retailers are bought at this level. Many a times it can happen that the market can come further down, but यहाँ वो यहाँ आके अटक गया, यहाँ ही अटक गया और इसके ऊपर चला गया. Now it can happen that once again it can come down and come to the demand zone because there are a lot of weekly fundamental, the big fellows, the FIs and the DIs, their investment is pending at this level. So it may happen that maybe in few days time the market come down to this level and buy, and maybe it can bounce back. Okay, same way if you see the Bank Nifty also, I had mentioned on Monday, the Nifty, Bank Nifty, HDFC and HDFC Bank, these four charts I had sent to you. It came down, it covered the gap, but fully gap cover नहीं किया, थोड़ा बाकी था, लेकिन अभी भी वो नीचे आ सकता है, cover करके ऊपर जा सकता है. If you want to see the HDFC Bank also, I had mentioned the same thing. It is, I'm just trying to cover up so that you understand that many people, I just was a little surprised that immediately when the bank went up, because on Wednesday or Thursday, I talked to somebody and इसने बोला कि उसका, that person is working somewhere in the bank and somebody in that bank told them buy HDFC, and people bought HDFC in the morning when the prices started going up. Please don't do this. Is event based things are there. There is nothing great which has happened. The merger will take 6 months to 1 year. After that, you will see the performances improving or going bad. So this is HDFC. At Monday evening, I had mentioned this. Okay, the gap will be filled. Don't buy, be patient. But still, I remember somebody telling me that they already bought it on the Monday itself. So ये एक सोच समझ, be a little patient. Don't go when the market is going up. Don't feel worried कि तुमने opportunity lose कर दिया. Market is going to come down. It is regular price. The gaps will be filled up. Okay, that is the time you have to buy. This is just a learning for you all. Similarly, HDFC Bank, this big gap was formed. The next day it came down. Tuesday, Wednesday it came down further. Thursday it came down, and Friday it was at this level. So what do you see? The market is covering the gap. It is filling up the gap. Here there are plenty of pending orders of many retailers also. Okay, remember this. Okay, so we go back to the let us see the 1 week performance of Nifty. See here. In this 1 week, Nifty moved by 1% positive to sectors went bad was media and IT. And all the sectors went positive. CPSC, Central Public Sector Enterprises, PSU banks, PSE bank, PSE, Public Sector Enterprise, energies, mid caps, commodities, FMCG. This is a sector which has moved. Okay, in last 2 weeks it has moved. Now, if you want to see the last 2 weeks for this sector, we'll see that. I had mentioned in also my remark that HUL has gone up by 12%. In 2 weeks, it has gone up by 12%. Okay. So that is a positive thing. Tata Consumer, Godrej Consumers, all of them have started moving. Okay. So that's a positive thing. Okay. You can see here it is showing 10.12%, but base, so around not 12%, maybe 10% plus. But if you consider the previous 15 days time, it was gone up by about 12%. So Godrej Consumer Products, Tata Consumer, all these are good stocks, but currently they are lagging behind, basically because of the margin problems are there. So over a period of time, you can expect this sector to do much better. Okay. So let's go to the presentation. The sector which did the worst was IT sector. Pharma was okay. You can see the percentage gain. PSU banks much better. Now in the PSU banks also, 4 banks are doing really well. Bank of Baroda, State Bank of India, Canara Bank, and to some extent Indian Bank. तो ये 4 बैंक में है तो अच्छी बात है. अगर और कोई है तो depending upon what gains you are having, you can book some profits also. Realty, hardly any movement. It is flattish. Auto is flattish. FMCG 2% gains in last 1 week. Energy 1.9, nearly 2. Infrastructure has just started moving, and along with that, even the cement sector has started moving. So selectively, some of the cement stocks are moving up. Okay. Now, I would like you to see the Buffett indicator. The Buffett indicator tells us how India is placed vis-a-vis the other countries. So you can see the annual returns are mentioned here. India is expected to give around 6.9% returns annually. (6.9% returns annually. Now, if you remember on Friday, the RBI MPCS mentioned that the GDP returns are going to be from 7.8, it has been brought down to 7.2. As per Buffett indicator, it is likely to be 6.9. The GDP growth is likely to be 6.9%. Now, what is this Buffett indicator? It is nothing but a ratio of the total market cap to the GDP. Okay. So 10 years maximum value for India is 117. The minimum value was 54. And the average is somewhere near 105 or something. Okay. The current value is 104. Now, if you see this 104 is the current value, that means we are significantly overvalued. Now, there is a modification to the formula which has been done. The total market cap over the GDP, and in the denominator, they also added the total assets of the Reserve Bank. Whatever the assets are there, the inwards which are coming from the point of view of we are building up good amount of dollars. So The current assets of the bank is in terms of 427 billion US dollars. That is the Reserve Bank assets. And based on the new formula, okay, this is the new formula. Total market cap divided by GDP plus total assets of central bank, which is your Reserve Bank of India. So that figure is coming to a value which is coming here. It was at the old market value, it was at the 104.72. Now it is coming to 90. So because the denominator, we have added the assets of the bank. Okay, that is $242 billion. So this ratio has come down to 91, which is a positive sign. The ratio should not be very high. Anything between 75 to 80 or 90 maximum is okay. If it is significantly overvalued, that means the market will have to come down. At 90% value or 91% value, we are significantly okay. So the predicted returns, as per the old formula, we are expected that they will be giving some kind of a return. Okay. And as per the new formula, we are much better placed. But still, the returns will be in the range of 6.9% to 7.2%. The old formula is telling me that we are significantly overvalued, but the new formula is telling me we are modestly overvalued. The old formula is PMC, total market cap, divided by GDP. As per the new formula, it is total market cap divided by, in the bracket, GDP plus total assets, which is the reserves, foreign exchange reserves, and the gold reserves which the bank is having, the Reserve Bank of India. You can go through this in Google, just type Buffett indicator for India, and you will be able to see this particular. Okay, you may have to enter as a login you may have to give your email ID. Now, some areas of concerns which are there, which we'll see now. This last quarter was the toughest India faced in so many years. Currently, all the commodity prices are at the near high levels. Some are highest and some are near high levels. Okay, so this becomes a problem for the manufacturing companies. Okay, it gives an opportunity for India, like the coal prices are increasing. So Coal India is benefiting, NTPC is benefiting, power company, energy companies are benefiting. The crude oil prices have stabilized near 98.26 and 102.32. The goal is stabilized around 1945. The geopolitical situation is becoming worse day by day. Russia is banned. They have taken a self-exit from UNHRC. Russian coal oil is banned. Indian coal, power, energy, oil companies will benefit. NATO is building up a pressure on Russia. Russia is becoming more and more aggressive, destroying various Ukraine cities one after another. And the NATO has mentioned that we are possibly that the war will go for a year or so. Currently, we are on 45 days. So if it becomes an extended problem, then this problem can create a major financial problem in the world. RBI I was a little surprised. I was expecting 15-20% increase rate, but they have reduced that. They have taken another method that the market will correct the interest rate. So they have taken that method, so that what is going to happen is the RBI is not enforcing the banks to go and increase the rates. The market, because of the change in the repo rate, the variable component is only there. There is no fixed component. So what is going to happen is the market itself will do the correction. So that is a good thing which has been thought of by RBI. So, but they have mentioned one more thing, that they may increase the interest rates going forward. Okay. And they also mentioned that about 100 BPS will be increased during the course of the year. So that is possibility is there. 100 basic points, meaning about 1% increase in the interest rate is possible. Inflation is on the rise everywhere, including India, which they corrected this year. Okay, just now it is around 5.7% or something. If the growth is affected, we may see some kind of a stagnation. Stagnation is nothing but a combination of stagnant growth plus inflation happening, which can lead to further recession kind of scenario. US Fed is going to increase the rates by 150 BPS, about 1.5% by December 22nd. May first week, they are going to announce the first interest hike. Neighbors, Pakistan, Sri Lanka are going through political and economic turmoil. The GDP of Pakistan has come down to 2020 levels is 264. The Pak rupee has now become 182 rupees to $1. The inflation is increasing in Pakistan. Sri Lanka is in serious debt. India is extending help. Consumer inflation as of February. This is not the latest one. Okay. As of February, war impact will further increase the inflation rates. So you can see India is slightly worse compared to Bangladesh. Bangladesh has started doing much better on the economic front. Sri Lanka is the worst off in the inflation, 17.5%, Pakistan 12.2%. The projection growth is India around 7.2%, Bangladesh around 6.9%, Pakistan 3.5%, and Sri Lanka 2.4%. Some logistics issues are very prominent, and that is increasing the manufacturing price of the products. So COGS, cost of goods sold, is increasing. China plus one factor is helping India. Okay. Stagflation fears, possibility of recession in US and other markets is there. This is one of the reasons we feel that FIS will have to come to India, because except some of the emerging markets where they are investing currently, there is no option available for FIS. They have to come back to India. Okay. The GDP estimates have been reduced from 7.8 to 7.2%. Recovery is going to take more time. Expect the year 2022 to be average, if not poor. Average meaning 9, 10, 11% returns at the Nifty level. For any stock position, see that stock price is above the 200 DMA, and there is something called as relative strength is positive. We'll see that as we learn further. You have to play a momentum game. Momentum game means with the particular stock going up, with a particular sector tailwind, a stock is going up, go and buy that stock and wait for the proper levels and exit at the proper levels. There is a possibility that Nifty may come down if some bad event happens, and it can have a rating downwards from 17,000 levels just now to around 15,500 levels if there are some bad events. FIs are still selling continuously in this 5 days of April, 5 working days of April, or maybe 6 days exactly. Okay, 6 days. In 6 days, they have sold 4,427 crores. DIs have bought 3,977 crores. The retailers are buying. That is why the markets are looking stable. From the index point of view, the mid caps and small caps are doing much better. Much better. Markets improvement hopefully will start post June or September. If the things go, if the war prolongs, it can go up to September also. So we don't expect the Q1 results like April, May, June results. I don't expect any major great results. Okay. Even if the companies are able to hold on, it is good enough. Indian markets will continue to move sideways and consolidating. That is one thing which is for sure. Nifty 50 will be range bound. Your portfolio, this is an important point for you. Make it like this: 50% core portfolio of your core stocks. From 70% in a normal case, I'm telling you 50%, 30% satellite, and 20% keep cash, because there is a possibility of 15,500, 600 levels getting touched sometime. If things go worse, then this 30% and this 50%, you can reduce each by 5% and increase your cash from 20% to 30%. It is up to you. I am just saying what I am likely to do. Increase your gold allocation from 5 to 10%, or if you want from 15, 10K badle 15. If the problems increase further, then you may increase from 15% to 20%, because in such a scenario, normally people invest in gold as a safe bet. Some of the sectors which are bullish are metal, oil and gas, energy, power, hotel, travel, commodities. The recent sectors which have turned around are defense, BEL, BDL, HAL, FMCG, infra, PSU bank, PSE and CPSE. This dark green is there because it is the most recent ones which have turned around. Flattish sectors are auto and realty. Bearish sectors are IT and media. Media is little flattish also. We can consider, but still it has gone down further. IT sector and economy may face problems. There is a lot of threat which is happening from American and European countries. They are not implementing the threat, but they are continuously threatening us that we will have a severe kind of repercussion if we continue with our neutral stance. But I believe that is the right way of going ahead. We have to be neutral. We need Russia and we need the American and European countries. So let us be stable and neutral. Okay. And they cannot go ahead and do something unilaterally, because they themselves will lose out, because Indian markets are more important to all these countries. Okay. Not only India, but they are all, it is important for them also. Selective stocks will do well in FMCG, PSU banks, financial services, chemical specialty. Now, China plus one factor is once again increasing the value of these stocks. Okay. China is having a lockdown. Many cities are locked down. So you'll see some of the pharma stocks also improving. Auto sector is going through a trouble time. It may take another 3 to 6 months. The chip shortage is still on, and the cost of manufacturing will increase because of the metal prices going up. Real estate will, there are many people who are very bullish. I am okay. I'm not saying that it will not go up, but don't expect too much of a gain. The problem is the interest rates are going to increase. This increase in interest rates from say 25%, 50% to 0.25%, 0.50% to 1%. That will basically create a lot of problems in your real estate. Sector rotation will continue. That is the way you are going to have a momentum and make some money. Within sectors also, some stocks are doing exceedingly well and some are becoming laggards. Look at the stocks which are doing well. Believe in your processes and systems. Be patient and a disciplined investor or a trader. We are talking of swing trade and positional and not intradays. Now, this week onwards, I'm actually giving you some of the points. Look at these stocks. The one in green are going to do well. Their fundamentals are also there. The one in blue, their fundamentals are average. And the one in red, the fundamentals are not so good. So these are the Chalet Hotel. Like if you remember, the 2 weeks back, I had given you Indian hotels, then Vinyl Chemicals, NACL India, and some more. I don't remember all the names now. All the stocks have done much better. Even Hindustan Unilever I mentioned. Okay. Now, I have gone through the fundamentals. So if you get opportunity, you can take a picture of this screen. If you get an opportunity, go for the stocks. Let us see some of the stocks on the charts. I've kept the charts ready so that I can show it to you immediately. Okay, I'm going from the bottom. Deepak Fertilizers. You can see the chart. This is my we'll be doing the moving averages today. So we are looking at moving average 2, 3, and 4. What is that? That is 21 days moving average, 50 moving average, and 200 moving average. So the blue one is 21, green one is 50, and red one is 200. Okay. You can see the volumes, a very big spike, and the volume was also touching the average line. Okay. So Deepak Fertilizer is looking good. JSW Energy is looking good. Note down the stocks. It will help you. IEX is very bullish. Please accumulate this stock. This is going to be like our BSE and NSE in the energy power exchange. Hikal Chemicals, I am not so particular bullish. The charts are saying it is actually going to start the bullish run. It came down. So wait and watch this stock. If it goes up, it will go up to this levels. All right, 690, 700 levels. Tata Elxsi, it is already bullish. Okay, I believe it should stabilize around these levels. So it has already crossed the zones. So now it is breakout has happened, but at this levels, it is a demand zone has been created. Vedanta, looking strong. ITC going strong, very strong basically. There is a demand zone over here. So if you are interested, go at these levels. Hindustan Aeronautic, all the three defense stocks are doing well. But don't accumulate too much because these are once again government stocks, PSU companies, and suddenly you may find allocations maybe not so good or something, and we'll find a drop in the stocks. BDL, these are looking very strong. BDL has gone up. Don't buy at these levels, buy at lower levels around 606 whenever it comes. It has already moved up, so it may not come down to these levels. BEL, I mentioned this in my write-ups also. So this is a stock which is doing reasonably well now. All these are old levels which are now over. We can look at this level for BEL. So the level is around 218, 219, 220 levels. I also entered the stock once again. I used to have it, then I removed it. Now I'm entered once again. SIS, it's a good level. Is entry is here, around here. Okay. इतना लो शायद नहीं आएगा, तो थोड़ा अपर लेवल पे भी आपको देखना पड़ेगा, लेकिन अपर लेवल पे नहीं है डिमांड जोन. So wait for the proper level to be created. Sheela Foam. Okay, I checked the level. This is a green stock. It's good. Fundamentals are good. I've checked the fundamentals, then I've colored them. So green ones are good, blue ones are average, and the red ones are poor fundamentals. Okay. So Sheela Foam at this levels, if you can get an entry, it is good entry. So looking at the scanners, I am giving you the stocks, and next week we'll see how well they have done. So very good position in this. Jindal still continuously increasing. So you can look at this level, which is a good level. A good demand zone has been created on a weekly chart. Chalet Hotels, I believe it is not so good fundamentally. Yeah, Chalet Hotel is fundamentally poor, so you can avoid that. Adani Green, Adani Enterprise, Adani Power fundamentally are poor. I've been mentioning this very regularly. So some of you must be thinking that I've got some kind of allergy to them. Nothing like that. You can have a look at the some of the fundamentals also. Here it is. Here is what, which is this chart. Adani total gas. The book value is not mentioned. EPS is not mentioned. And see this peer comparison. Okay, all the other gas companies are at 8, 9, 10, 12, 15 levels. And where is Adani gas? 462 levels. Can you imagine? The PEG ratio should be maximum 1 to worst come 3. PEG of this is, so the price is extensively costlier. Now people buy it because I don't know. I cannot make this statement on this channel. I mean, because it can be dangerous. Adani Green, book value 15.8. What is PB? Price to book value 147. What is the industry P? 74.8. What is the PE for this stock? 893. See this, the pros and the cons. Go through this on the screen now. You can see this. One of the best companies, Tata Power, is at 52 PE. NTPC is at 9. Power Grid is at 12. And Adani Transmission is at 230. Adani Green is at 892. Adani Power is at 305. So when you go through these things, you remember one thing is when these stocks go up, they can come down also in the same way. Okay. So be a little careful when you want to buy. It is always possible that you will make money on these stocks because the stocks PE and all are very high. Okay. See the earnings per share, 3. Okay. So currently it is dangerous, but if you want, you can always go for it. This is the legend which I had mentioned for you to understand. Okay. Blue Star is looking good. The demand levels over here. Engine one of the good stocks. Okay. So I had actually exited that stock and booked profits, but I am likely to once again enter the stock at the right price. I'm not getting the price. I actually kept an order book, but वो price मिल नहीं रहा है. So if you get somewhere over here, this is on the monthly demand zone, around 1500 levels or so. This looks to be difficult, but अगर नहीं मिला तो थोड़ा ये लेवल पे भी आपको ट्राई करना है तो कर लीजिए. What is this level? 1684 is one level and the below level is 1450. 1450 will be difficult for it to come because I am trying since 1600 levels. I'm not getting the stock at the right level. Never run for the stock. Don't keep on chasing it. If you get it, good. Otherwise, forget it. Uflex is a good stock. It's a small, I believe it is a small cap company. Yeah, it is a fundamentally okay. So you can look at this demand. Polyplex. Here is the demand zone. I'm taking from the middle of the zone. At this levels, quite costly it is. Even if you take up also, the stock has already moved up. Chola Finance and Investments. So this stock has it has basically run away like anything. So wait for the right price. Now all these stocks which I have suggested in this particular list is based on the some of the scanners which I have. All are showing good momentum growth, but you have to be little cautious. Like these stocks are average fundamentals. Blue ones are average fundamentals. The red ones are poor fundamentals. Okay, so be careful. Okay, we'll review them next week once again. And some of the people are asking me this stocks. Tejas network, I'm having it at the low levels, but now it is continuously going in upper circuit. I had bought at 400 levels. So avoid this stock because it is continuously in upper circuit. Many a times when they go into upper circuit, they come down also in lower circuit in a similar manner. And that time it becomes problematic. BCG, I want to enter this stock, but it is continuously going into upper circuit. I will enter at a lower levels somewhere over here. So let's wait. I'm unable to draw the zones because basic problem is continuously वो upper circuit दिखा रहा है. So I'm not able to draw the levels. So somewhere over here at around 90 levels, if I get, I will enter, but it is a risk level. Just now also the BCG ka fundamentals are okay, but we'll have to wait and watch. TTML, once again, I am signing this stock once again going into upper and lower levels. You can see that continuously it is going up, down, up, and once again it has started coming down. So little bit shaky, not very sure about it. Any other stock you want me to see before I go down to my presentation of the next part? Any stock you want me to see? This is my suggestion for the coming week. Good stocks for your watch list. I showed you the levels also. Green ones, you can go for it. These are all positional stocks and swing trade stocks, which will do well during the course of the week. If there is a bad event or something, be a little careful. Don't just go for it. Okay, look for a better position in your good pricing also. So I would like to conclude the first session. Okay. Any stock you want me to have a look? Yeah.
So can you take Reddington?
Yeah, sure. Reddington will do well. Don't worry. Okay. This is the 21-day moving average. This is the 200-day moving average. It has just started moving up. Okay. It will do well. Don't worry. This stock has got a lot of potential. And the fundamentals also good. If you want to see on the screen now, fundamentals also good.
Sir, I need it for the fresh entry.
Okay. See here, stock P is reasonable, very reasonable. The PB book value, price to book value is also reasonable. It should be about maximum about 3. ROC is 21. ROE is this is debt to equity is not, there's no debt, major debt. EPS is 15, which is good. EV to sales is less than 1. Okay, you can see this is my Reddington, and compared to others in a similar position, peer companies, these are all trading kind of companies, logistics kind of companies. They are doing much better. Now, what level to enter Reddington? See, this was a demand zone which I had created earlier, 144. So the demand zone is still valid. Okay. So if it retraces and comes at this level, you can buy. Supposing it does not come because it has started moving up. Supposing it does not come. So around 151 on the weekly chart, there is a possible. Okay, around 151 it is. On the weekly chart, you can go for it. This is the weekly demand zone. Okay. Okay. On a monthly also, it is showing the same drop, base and rally. So both weekly and monthly are telling me the same thing. So you can go around this levels 150. So it is very near to the current metric price. थोड़ा नीचे हुआ, opportunity मिला, entry करिए. देखिए volume भी काफी है at this levels. On the day chart also, last week there was a good volume. Whenever the volume and the stock is going up and the volume is positive, it is good. When the stock is coming down and then the volume is high, it is bearish. This is bullish, this is bearish. Okay, any other stock? BSE, CDSL, both are very good stock. I entered BSE at around this levels, 900 levels. Recently, I bought, normally nowadays I'm buying in tranches. I'm first buying, supposing I want to buy 50, I will buy 25, look at the performance, the stock is improving. Okay, so add that thing. CDSL, BSE, both are good stocks. Good business is happening continuously in CDSL because of Zerodha up stocks and all. They all are CDSL based companies. So it is an advantage. Okay, we stop for the day for this part. We'll come back for the in 5 minutes time for the second session.